Iren just went from Bitcoin miner to signing a $9.7 billion deal with Microsoft, and the stock, it's up 400% this year. So where does it go from here? Or is this where it breaks? Well, here's what I know. Microsoft prepaid 20% upfront. That's almost $1.95 billion in cash that hits Iren immediately. But the AI business they're betting the whole story on only did $7.3 million in the last quarter. So to hit their $500 million target by early 2026, they need to grow that segment by about 68 times, and fast. And you're paying for that hope right now. Price to sales is about 27x. Price to book, close to 5. So good, it can't just be good. It's gotta be flawless. That's why in this video, I'm gonna show you what tells me whether this Microsoft deal is a launch pad or a liability that forces dilution, delays, and a painful re-rate. Now, if you're new to the channel, hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor, and that is a good thing. I break down the numbers to help retail investors like us make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Iren, previously known as Iris Energy, was originally founded in 2018 as a Bitcoin miner that used 100% renewable energy. And that single detail is the start of everything that happens next. Unlike typical mining operations, you could say that they over-engineered their facilities. They have more than enough cooling power, enough power infrastructure, and room to scale. So without realizing it, they were already building AI-ready data centers before the AI boom even started. And that's the accidental advantage that most investors couldn't price in, at least until it's obvious. Fast forward to 2024, and the company stopped expanding Bitcoin mining and went all in on AI cloud services. That's a hard pivot, and it changes how the market should value the business. They even rebranded to Iren Limited in November of 2024. And branding aside, what matters right now is what they're selling today. Today, they operate as a vertically integrated AI cloud service provider. What does it mean? Well, it just means that they own every aspect of their business: the land, the power sources, the data centers, the computing equipment, the cooling system, you name it. And that level of control is rare, and it shows up in the margins, or it will show up if they can execute. Now, what's been going on with the company recently? Well, on November 3rd, Iren announced a $9.7 billion contract with Microsoft over the next 5 years. And yes, that headline alone can move a stock, but the details are what matters more. In this partnership, Iren will provide Microsoft with access to nvidia's GB300 GPUs at its facility in Texas. As part of the deal, Microsoft made a 20% prepayment upfront, which works out to about $1.94 billion, and that hit Iren's account immediately. That's not a promise. It's cash, and cash changes the entire risk profile overnight. Now, to fulfill the contract, Iren signed a separate $5.8 billion deal with Dell to buy the GPUs and supporting equipment. And this is where the execution risk starts to come in, but I'm going to come back to that. It's all future stuff. Let's see what the numbers look like. In terms of revenue, it was up 355% year over year to $240.3 million. But Bitcoin mining made up a vast majority of that. So the top line pop looks amazing, but it's not coming from the part of the business that Wall Street is paying for today. In fact, AI cloud services brought in just $7.3 million. So it gives us a clear picture of how early they are in this transformation. It also tells you how much the company needs to go right from here. At the same time, total expenses came in at negative $358.8 million. Now, You might wonder how negative expenses or how expenses can be negative. It's a fair question because it's not free money. It comes from unrealized gains tied to Iren's convertible debt. These are paper gains that boost the numbers on paper, but don't represent any real cash that's coming in. So you don't want to base your whole thesis on that one line item alone. Operating income hit nearly $600 million, a big difference from an operating loss of $45 million in the prior year. And net income came in at $385 million, or about $1.42 per share, compared to a $51.7 million net loss last year. So to me, it looks like a blowout quarter, but you do have to separate the clean operating strength from the accounting noise to get a full picture. The balance sheet is also solid. Iren's cash and cash equivalents are over $1 billion against almost zero debt. And that's impressive because it buys them flexibility when that build-out bill comes due. Now, despite the stock's recent rally, there are factors that could propel the stock even higher because that's what we all as investors are excited about. Now, the immediate thing that comes to mind is the expansion of AI cloud, right? This is the big one. Iren has doubled its GPU capacity to approximately 23,000 units using nvidia and AMD accelerators. That's the build. Now they need the fills. They're also targeting over $500 million in annualized AI revenue by the first quarter of 2026, and then scaling all the way up to $3.4 billion by year end of 2026 and expanding to 140,000 GPUs. I mean, that is an aggressive ramp, and aggressive is just a polite way of saying the market is not going to punish any slip at this point. And not only that, the expansion to 140,000 GPUs, that's 6 times more GPUs than what they currently have. So if they execute on this, the revenue growth here is going to be staggering, and the stock is already pricing in a clean ramp up, which is why the next updates matter so much. Another potential growth driver here is Bitcoin mining and capacity scaling. So AI is getting all the headlines, but Bitcoin still remains an incredibly strong cash-generating business for Iren. Bitcoin may have dipped recently, but it's still up more than 430% over the last 3 years, and it's got an absolute value in dollar terms. So mining could be the cash engine that funds the AI build without constant dilution. Iren also achieved 31 exahash per second of installed mining capacity. An exahash measures the computing power dedicated to mining. Think of it like hash rate, the speed of the mining operation. The company's on track to reach 50 exahash per second, and that would translate to a 450% increase in mining capacity. And more hash rate usually means more production, assuming network difficulty and the Bitcoin price cooperate. Personally, I think this Bitcoin mining segment is important for 2 particular reasons. One, it generates the cash needed to help fund AI expansion without the constant need for capital raises, and it also provides some downside protection. That's the hedge inside the business model. And I haven't heard anyone talk about this enough. I mean, if AI demand starts to slow down, Iren still has a very profitable core business, and that's one of its selling points to investors. But it only works if mining stays profitable through the entire cycle. Now, let's talk about what could go wrong. These are things that often come up in my Discord because it's where the high growth stories often actually blow up. I think the biggest near-term risk is the execution on its expansion. Building large-scale data centers isn't as easy as it sounds. I mean, there could be construction delays and other struggles that come with integrating thousands of GPUs into stable clusters. And with AI clusters, uptime, it's the only thing you can get, right? I mean, it's the product. So even the smallest issue with that could become bigger problems. Point is, that Microsoft contract, has some very specific delivery timelines built into it. And missing any of those deadlines could result in financial penalties or even termination of the contract. And Iren is essentially tripling its infrastructure within a very short 18-month window. That alone is a significant operational challenge. I mean, this is the part the market shrugs off right before it stops shrugging, right? There's also funding concerns. Sure, they have very strong cash reserves right now, but they'll likely need additional capital beyond the current resources to complete the full build-out to 140,000 GPUs. Because GPUs, power, and cooling at that scale, it's not cheap, even with good financing. Now, this could result in two things: issuing debt or selling more equity, which would dilute existing shareholders. And dilution is just kind of like the silent tax on retail investors if execution drags on. Also, some investors are already questioning whether these announced AI infrastructure investments will actually materialize sometime soon, because any slowdown would likely hit companies like Iren very hard, as they're making a concentrated bet on sustained AI growth. That's a double-edged sword, right? Focus creates upside, but it also concentrates risk. Now, let's look at what this development meant for investors, right? Year to date, the stock has gained roughly 394%. Over the past year, it's up about 259%. And over the last 3 years, well, growth is a staggering 3,300%. This means the market is betting on what Iren is doing, not what it was doing in the past. So the bar is already high, and I see it keep getting higher. However, we do need to talk about valuation. Price to sales is 27, and price to book is nearly 5. These figures are considered expensive by any traditional measure. You're not buying value, you're buying the future ramp that has yet to show up in the next few quarters. So despite this valuation, is Iren a buy right now? Well, consider that a consensus among 14 analysts, they rate the stock a moderate buy with a score of 3.86 out of 5. And that rating has declined over the last 3 months, even though the stock has climbed higher. I think some analysts are just getting cautious at these levels. The high price target is $136 a share, which suggests as much as 180% upside from the current levels. And that spread tells you that expectations are just all over the place. And that usually means volatility isn't quite done yet. Personally, I think Iren is a classic high-risk, high-reward opportunity. Right now, you're buying the ramp, not the revenue. If that ramp stutters, the valuation gives you zero margin for error. Now, before I go, I have one last question for you. Do you believe in what Iren is doing? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe, because it helps others find the video, it supports the channel, and you won't miss out on my future deep dives. Well, that's it for me today. I want to thank you so much for watching, and I'll see you next time.